do definitely see that kind of cross-regional, cross-border need, and that becoming more prominent in relation to kind of the demand and actually the work that's being done on solving for it. So I do think it's recognized that we want to be able to connect these instant payment schemas together. I think obviously there needs to be a big push on the, as we said, standards and kind of, message protocols, but also expectations in relation to, the different parties involved in that, whether it's different schemas in different countries, and what your obligation is and how we're actually how we're helping then from a bank perspective to facilitate that as well. So I think there's a joined up dialogue that needs to happen across, the regulators, the banks, the schemas, etc., in the region. So I do see that, in the next few years we're going to have more and more. I hope we'll have them as a network rather than kind of point to point, because I think if we do point to point, it's going to take us a lot longer to get there. And I think once you do it for one country, obviously, or one connected set of two countries, the next country wants to do it as well. And I think from a banking perspective, that's going to have a massive, that's going to slow down the progress if we don't actually put a network that sits in the middle and we don't put the right protocols and kind of expectations in terms of standards, to ensure the kind of robustness of the controls from a risk and kind of fraud activity and anti-money laundering perspective as well. But I do see definitely the kind of evolution of kind of instant being something from a the demand side is there, as I said, all of us, this instant gratification I think is definitely a younger generation kind of expectation now, because everything happens so quickly. So with that, from an embedded payments perspective, in terms of payments that are kind of part of an app, an activity, whether it's you're playing a game and then you're within the app you're actually doing that payment activity. I do see that being more like we were talking about, that kind of more pull element as well, in relation to kind of being able to pull the funds because I have done something, whether it's like the gig economy kind of payments and stuff like that. I think I do see that being another kind of part of the answers that need to be kind of solved for, the problems that need to be solved for as well. And I do the request to pay, QR codes, proxy, all of this from a usage of kind of wallets in that chain. I do see all of them coming in more prominently in the next few years in relation to how we're kind of managing or how we're facilitating the I think service needs of our of consumers. And I think that's for us where our corporate clients will move into this. They will be more and more, we do see our traditional clients moving into more marketplaces, starting to take on the, different elements of, I think, a value chain where they may have outsourced that to distributors, etc. So I do see our kind of, our corporate commercial aspects of our corporate clients also kind of evolving, and for us to be there with them as they kind of go on that journey, providing, liquidity and FX problem solutions as well. If you think we go 24/7, I don't know if everybody knows we don't have an FX market 24/7. So if you go 24/7, and we don't have clearinghouses that are open 24/7, so how do we solve that as well? So how do we solve for the 24/7 nature of the economy that will come across all of the different use cases? And I think that's where like our corporate treasury clients, in terms of that element, is very important to us, is how do we work with them, but also how do we kind of be part of the market discussions and the discussions with regulators to help that be guided in the right direction.